Hi there, welcome to Kneppy Invest. Apparently, Pepsi have changed their logo. They changed it in March. Totally oblivious I was to this change to Pepsi, even though I'm a fairly big drinker of Pepsi Max. In fact, when it comes to liquids, it is my only vice. I don't drink coffee, don't drink tea, I don't drink much alcohol. In fact, I might have one shot of whiskey per month. Don't drink beer, that sort of thing, but I do drink a lot of Pepsi Max. And a little bit of a shock that they have changed their logo. But I thought I would include Pepsi in today's video because it's a very intriguing story. And I probably would say that Pepsi is one of the best investments you could have made. In fact, Warren Buffett is quite famous for his massive stake he did take in Coca-Cola in 1988. And what I decided to just before I started recording this video is have a look at the returns of Coca-Cola compared to Pepsi. And funnily enough, if Warren Buffett put his money into Pepsi, he might have done just a little bit better. Now, this is not including dividends, but since May 1988, I'm not exactly sure when he took a position in Coca-Cola that year, but since May 1988, Coca-Cola has returned 10% per year. That's just in share price appreciation, not including dividends. Well, Pepsi has grown at 10.6% per year, so slightly better than Coca-Cola. And I think those sort of compound annual growth rates just in capital appreciation, share price appreciation, not including dividends, is a sort of growth you ought to see for the long term. In fact, I would suggest that Warren Buffett's investment in Coca-Cola is one of the reasons why he's highly regarded in the investment community. Now, in today's video, I'm not only going to feature and look at Pepsi, I'm also going to look at 4 other American-based companies and then 9 companies listed on the ASX. So let's have a look at the companies I'll be featuring in today's video. Now, I should mention straight off that I'm not a shareholder of Pepsi, much to my chagrin. Probably should have taken a position in this company many, many years ago because it has been a fabulous performer over the time I have been an investor. So that's maybe one thing I will rectify in the future, becoming finally a Pepsi shareholder. Now, you might think that Pepsi only sells drinks, but how many times have you bought a snack or something and then realize it's made by Pepsico? It happens to me all the time. So they have a fairly big snack division. In fact, I've just decided one of my next videos is going to be Pepsi versus Coke, or just do a video on Pepsi because I'm not sure what sort of brands they do sell. But whatever they're doing, they are successful. So I'm not a Pepsi shareholder. Can't say the same thing in regards to Microsoft. I'm a shareholder of that company. And I'm also a shareholder, happy shareholder of Shopify. They have released their quarterly results and the share price has absolutely gone bananas. But I'm not a shareholder of Lululemon. And I did notice a store somewhere in Brisbane, can't remember exactly where, but they are starting to spread their wings throughout the world. And I'm not a shareholder of Costco, although I do mention this company a lot because they do exist on really low margins, and that is their moat, really low margins. And they've been very successful doing that. Now on to the ASX companies I'll be looking at in today's video. NAB was going to be my featured company of the week until I decided to include 5 American-based companies, and they did release their half-year results. The market didn't take kindly to it. In fact, the share price was down about 6%. Also have a look at Empire Energy, Media, and their share price took a bit of a hit during the week, and also Accent Group. And the last 5 companies I'll be looking at in today's video include Austin Engineering, another company that took a bit of a hit during the week, PPK Group. First time I would have been looking at this company in any sort of capacity. In fact, I can't tell you what they do right now. So we're going to be looking at the chart and not really discussing what they do. Now, I have been recommended or suggested to do a Kneppy's analysis video on AGL. Now, that is 6 on my to-do list in regards to that video series. But I thought I'll have a look at the chart of AGL in this video because the share price is at an interesting level. Also look at 29 metals. Now, if you know what the 29th metal is, or element is on the periodic table, you would know that is copper. Yes, 29 Metals is a copper producer, although they are having problems in one of their mines in Queensland because of historic rainfall. And the last company I'll be looking at or featuring in today's video is EOS, Electro Optic Systems. I did a standalone video on this company, but again, I just want to take you through the chart because that chart for EOS is looking interesting right now. But first, let's have a look at Pepsi. We're going to look at three charts. We're going to look at a monthly chart, a weekly chart, and a daily chart. The monthly chart here goes all the way back to when they listed on I was going to say the ASX. I wish on probably the NASDAQ. Yeah, the NASDAQ. And this is also a log chart. So I just want to look at the log chart when I'm looking at the long-term chart to get a better perspective. Because if you don't log this, the chart does look like it's growing exponentially, which is understandable. But so you can just see, just by looking at this monthly log chart, that the share price has been going up throughout its entire history. Now, there have been periods of time the share price does pull back. In fact, the worst time during Pepsi's history was way back in 1974 when the share price fell a fair bit from $1.55 all the way down to about 54 cents. And there have been periods of time the share price pulls back a little bit, but generally, share price moves higher through time. And in fact, since the GFC, the share price of this company on a monthly basis just keeps on grinding higher each and every, well, I'd say month, but every few months, the share price for this company reaches an all-time high. That's the sort of thing you want to see if you are a long-term shareholder of a company. And just to emphasize that point, this is the weekly chart going back to 2013, so a 10-year weekly chart. And even though there has been times, slight periods of time, short periods of time, the share price pulled back significantly, and during the COVID-19 financial panic was one of those times, whenever you see a share price fall below the blue line, which is the 150-week moving average, that's the time to buy. It doesn't fall below that level for very long, and it doesn't stay below that level for very long either. So a good time to buy this company was back in 2018 and also during 2020. Share price got close to falling below that line, but it was held up in 2021. But the share price just keeps on going up. You'll notice a little bit of volatility in there, but not a lot. So this is the sort of company you want to own in your long-term portfolio. Share price going from the bottom left to the top right over the past 10 years. But when you do look at the daily chart, you do get a little bit of different perspective. You wouldn't say a definite uptrend in the share price just by looking at this particular chart, which goes back to, now let me just look at this for a second, goes back to November 2021. You can see during 2022, even though the share price was creeping up higher, there was a lot of volatility there. Share price was ranging between, say, the mid 170s down as low as the mid 150s, which doesn't seem all that much. But right now, at the end of trading on May the 6th, which will be May the 5th in the United States, share price did close at an all-time high. Now, what I would be doing if I was thinking of becoming a shareholder of this company is just wait for another pullback, because we have seen pullbacks happen quite frequently for Pepsi. Now to Microsoft. Now, this is one of the companies I do own that's listed on the NASDAQ. Also own a few companies on the New York Stock Exchange. And it does look like the momentum and the trend in Microsoft is quite clear. And that trend really shifted in early 2023. So say January or February, share price of Microsoft was in a well-defined downtrend throughout 2022. And then I did take a position in this company towards the end of 2022 just because I saw some really good value for this company. I'm quite bullish on this company, quite bullish on a few of the big tech companies in the United States. And I think these sort of companies will control the world forever. Well, maybe not forever. I'm being a little bit hyperbolic there. But I think these companies have a lot going for it, particularly with all the AI, that sort of thing. I think the world will be considerably different in 10, 15 years than what it is right now. And Microsoft, I believe, will be at the forefront of those significant changes. Not like Cathie Wood, who thinks the economy is going to grow at greater than 10% per year because of AI. I'm not that bullish when it comes to AI, but I do think there is potential. We are going to go through a significant growth boom because of AI. Productivity should improve significantly if we are able to use AI efficiently. I think that is going to be a big question that we need to answer. Anyway, Microsoft has moved from a low of about 200 and we'll say $14 to a current share price of $310.65. Share price now has moved into a beautiful developing uptrend. How long this uptrend goes, who knows? So I'm a happy shareholder of this company right now. Now to Costco, and this is the daily chart going back to March 2022, so almost a one-year chart for this company. And the reason I wanted to include Costco is just because we have two diverging lines, and that is suggesting that the volatility in this company is becoming less and less, sort of like a symmetrical triangle. You can see the highs are getting lower and lower, while the lows are slowly getting higher and higher. And you also notice I've included, with most of these charts, I've included the moving averages, and the three moving averages I've included are 25, 75, and 150. And the difference between, or distance between the 25 and 75 is shaded in either green or red. And when you see it going from green to red, green to red, green to red, green to red, it's telling us there is no inherent uptrend or downtrend in the share price. You can definitely say that for Costco right now. And what I'm thinking, as these two lines converge on each other, which should be quite soon, we're going to see the share price either pop up to the upside or pop down to the downside. And I think the high likelihood is the share price will pop up to the high side. And I think that could be the beginning of a new trend in Costco's share price. Now, this is another company I don't own, even though I do talk about this company quite often, because I usually talk about how I do prefer pretty good gross margins in companies I own, particularly high quality companies. And this is sort of the exception to the rule, because their business model is all about surviving on low margins and now beating their competitors like Walmart. Now to Lululemon. I do like the name Lululemon. Now, I've never been into a Lululemon store, and I am assuming they sell mostly women's clothing. Now, I did see a store recently in Brisbane, which tells me they are expanding, and they obviously released their quarterly results about a month ago, or something happened a month ago. The share price popped up, and the share price kept on increasing after that announcement. You can just see the share price went from about $320 up to about 360. So simple math say that's just a less than 10% rise in share price in one day. But where the share price is right now is really interesting, because if we go back to the previous high, which was back in very early December, that high was at these levels. So that's a natural resistance level for Lululemon. And if the share price can get above this level, that means the share price will be at a one-year high. So many good things going for Lululemon. Not the sort of company I probably would look at taking a position in, but I'd say if you do look at the financials, this company is growing has been growing at a fairly nice clip over the past 5 to 10 years. And the last American company we're going to be looking at is Shopify, listed on the New York Stock Exchange. This is another company I do own in my portfolio. And the main reason I took a position in this company, even though they are not profitable, I think they have been profitable maybe 1 or 2 years, but not continually being profitable, is just because I do think this is a potentially high-growing company for many, many years. This is online retail, that sort of thing. And the share price had decreased a significant amount during 2022. In fact, the decrease in share price started well into 2021. Share price did look like it was starting to turn around. Sentiment in this company was shifting from highly negative to neutral to even positive towards late in 2022. Share price, in fact, in February got up to about $53 and pulled back. But the company did release their third quarter results. I think it's the third quarter results. Fourth quarter results. I think it's fourth quarter results, because their financial year finishes in April, if I remember correctly. Anyway, the market absolutely loved these results. Share price was up something like 25%. Not only that, the share price it actually opened and closed above those highs we saw in February. That was a very bullish sign. And then the next day, on the 5th of May, the share price increased a further 8.25%. Now, that was helped by a fairly bullish day on the American markets. I think the NASDAQ was up something like 2%. And we also have seen pretty high volume coming in on these days. Share price closed at $62. The last time the share price was this high was way back in April of last year. So we are talking about on 1 year high for Shopify. Not only that, share price has now moved, I think, in a pretty good uptrend. And I think we're just with the really good tailwinds for this company over the next 5 to 10 years. I do think the bottom has been reached for Shopify. Now onto the ASX companies, and the original company I was going to have as the feature of today's video was NAB. And the main reason for that was because they did release some results during the week and the market didn't like it. Share price down 6.4% on the day. That is fairly negative. And the last time share price was this low was back in June of last year, when there was that overall weakness in the market. You can see during the first few weeks of June, NAB share price went from around about $31 all the way down to $25.50. So sort of about a 25% drop in share price in a fairly short period of time, and then a nice V-shaped recovery. But the share price is in a downtrend right now. I have now heard quite a few people being a little bit less bullish about banks, which is understandable because of the potential problems we're going to be seeing in the future. Who knows? A lot more competitive out there as well when it comes to mortgages. A lot more players, a lot of small players as well out there, not only among the 4 big banks and Macquarie. So a lot of competitors and really big volume as well coming on these last 2 trading days. So they released the results on the Thursday, and then even on the Friday, a lot of volume on that day. So the one thing I'd be probably thinking about when it comes to NAB is just the valuation of this company and also the other banks. Now, for those who don't know, I don't consider the banks, apart from maybe CBA and Macquarie Bank, to be high quality. Not the sort of companies you want to own for the long term. In fact, if you look at the long-term chart for NAB, so let's do that right now, you'll see why these sort of companies are not long-term holds. So compare this chart, which is the weekly chart, 10-year weekly chart for NAB, to Pepsi. Which company would you prefer to own? Not only that, NAB's dividends probably through this time have been flat. In fact, maybe they've even fallen, while Pepsi dividends have probably been growing every single year. And this is a sort of an indication of why I would not consider NAB or any of the major banks, apart from maybe CBA, it's a little bit of a different story, why they are not long-term holds, because all you're getting is dividends. And to be frank with you, the dividends are not that high. Share price over the past 10 years has actually gone backwards. It has actually fallen. The only time I would buy the banks, and again, I'm talking about the 3 major banks apart from CBA, is when I see some value, and then I will take a short-term, maybe even medium-term position. For instance, I did buy a few banks back in May 2020 when the share price was at pretty low levels. In fact, NAB got to the same levels in terms of share price as the bottom of the GFC. Those are the times, in my opinion, to buy these sort of companies, when they get to historic lows and there is some value, and even then, they're only there for short-term periods, maybe even medium-term periods. Now to Empire Energy. I just want to include some companies I have never looked at before or included in one of my videos. I'm pretty sure I've not included Empire Energy in any of my videos, but I'm not absolutely certain about that because I do include a lot of videos maybe I have included this video in one of my tech updates. I just don't know. But anyway, they did release an announcement during the week. NT government finalized Betelgeuse regulatory framework, providing green light to move to production approvals. I did have a look at Empire Energy's quarter report. They did generate about $3 million in cash receipts. So this company is already in production. And the market absolutely loved this announcement. Up 28% on pretty big volume. Highest volume we have seen since August of last year. And that volume continued in the next few days. But a lot of volatility because the next day, the share price actually opened up at 20 cents and then closed at about 16 cents. So during the day, the share price fell about 20%. And then the next day, last trading day of the week, share price was fairly flat. The only problem is where the share price did go on the Thursday was just above the blue line, which is the 150-day moving average. And we can see during 2022, particularly in the last half of 2022, the 150-day moving average has been a resistance level for this company. In fact, it's reached it 1, 2, 3, 4, 5 times during that period. And every single time it reached that level, we saw it pull back. Actually, not level, that moving average, it pulled back. And then on that Thursday, it actually opened above the moving average. I'd call that a false breakout, a potential breakout if it stayed above that moving average, and then pulled back because selling came in. So share price is still below that level, still in a resistance zone. So even though the market did initially like this announcement from the company, the share price has not moved into an uptrend, and I don't think the sentiment has quite shifted from negative to positive for this company just yet. Sometimes the market gets things absolutely wrong, and that's exactly what happened with OO Media. They released, or they presented at a Macquarie Australia conference on the 3rd of May. They also included a trading update in that presentation, and the market did not like that. Share price down 23.9%. And then share price remained sort of really down the next 2 trading days. But what was really interesting about OO Media is you can see the share price had moved into uptrend, and it moved into uptrend late in 2022, early 2023. Share price had moved from about $1.30 up to a high of $1.72. I did take notice to this developing uptrend and was thinking, oh, this could be a nice position to take, but the market got it absolutely wrong with this trading update, which is a sort of a surprise, because when you think companies are going to reduce their spending on advertising, and what does OO Media do? They're an advertising company. In fact, I have heard that the first thing companies do during bad times is decrease their advertising. So when they did release this trading update in the presentation, it was, or should have been, no shock to the market that they're being a little bit, I wouldn't say bearish, but they're saying that trading has been quite muted or something like that over the recent times, and that's why share price down 23.9%. So even though the market was shocked, when you look at it back, and they shouldn't have been that shocked. So this is an instance where the market got it absolutely wrong. The market got it wrong for OO Media. Are they getting it wrong for Accent Group? This is a company that owns something like 34 or 35 brands. If you don't know, just go to the website. And they do have all the brands, or list all the brands on the website. And there's just a plethora of different brands. Some of the brands I have never heard of. Dr. Martens, I've heard of that. Platypus, I don't know much about Platypus. Blue Store, Hokas or Cody, Sebago, UGG, Timberland. Not sure they own these. Athlete's Foot, not sure they own these brands or they supply some of these footwear in their stores. But anyway, they did mention some. I did see somewhere mentioned they have over 800 stores. This is on the website. 34 brands and over 35 online platforms. And just look at this chart for Accent Group since late 2022. Share price has more than doubled. In fact, the share price has gone from $1.20. In fact, it was a little bit lower there in June. Share price got down to about $1.15. The current share price is around about $2.50, $2.60. So the share price has more than doubled in a fairly short period of time. And you can definitely see share price in a well-defined downtrend, shift in sentiment late in 2022, and share price has been in a beautiful uptrend since about November of last year. Not only that, if you look at the longer-term chart for Accent Group, it's moving towards all-time highs. So I'd be a little bit nervous about that, particularly because of retail spending. And I wouldn't be surprised to see some retail companies put out some profit downgrades because of a decreasing retail spending. Now, this company owns a lot of foot stores or footwear brands, I should say, not foot. They don't sell foots, they sell footwear. And maybe footwear is not quite as discretionary as some other sort of, retail stuff. Anyway, so maybe that's why the market is a little bit excited about this company. They've put out a few really good trading updates over the past 4 to 6 months, and that's why the market has fallen in love with this company once again. And that's why positive sentiment, beautiful uptrend in the share price. Question is, just like they got it wrong with OO Media, have they got it wrong with Accent Group? Now on to PPK Group. Definitely the first time I've included this company in one of my videos. And there's a couple of reasons I've decided to look at PP Group, because there's been a little bit of life in this company share price over the past 2 months. Share price has gone from about 88 cents to a current share price of $1.40. Now, in regards to what this company does, I just went to the website. So it says here on the website, PPK Group continues to grow and invest the organization with innovative technology. Our businesses showcase the scope and capability of a future-driven focus. That tells me nothing about what they do. Do they invest in other companies? And based off this what we do page on their website, they have investments in BNNT Technology, leading the world in the development, manufacture, and commercialization of boron nitride nanotubes, or BNNTs. They've made an investment in Craig International Ballistics, leading supplier of body armor to the Australian Defence Force and police forces. Sounds like a company actually I do own on XTech. LIS Energy plans to make lithium sulfur batteries a reality. Advanced Mobility Analytics Group aims to be the world-leading digital platform provider for proactive road safety analytics and management. They might have other companies as well. But another reason I wanted to look at this company is because there was a lot of hype in this company after COVID-19. And let's have a look at the long-term chart, and you'll see a Matterhorn pattern. And we've seen a lot of Matterhorn patterns play out over the past 3 years. If you don't know what the Matterhorn pattern, something I've just made up on the spot a few weeks ago because of these sort of charts. So let's have a look at the weekly chart of PPK Group now. So this is the weekly chart for the company going back to 2018. The share price was like $1. In fact, the share price did move in a really nice uptrend, a little bit of volatility in there, but it was really after COVID-19 where we saw, particularly in 2021, where we saw a lot of hype in this company. In fact, the share price went to a high of about $22 in August, September 2021. At that point in time, the market cap of this company was $1.9 billion. And since then, the share price has fallen 95%. So if you just look at the outline of these candlesticks, it looks like the Matterhorn. If you don't know the Matterhorn, I just suggest Google it because this is the sort of pattern we have seen a lot, particularly in unprofitable tech companies. During 2020, particularly the last half of 2020 into 2021, we saw rapid appreciation in those sort of companies. And then really since about late 2021, we have seen a rapid decline in their share prices. So you're going up the cliff of a mountain and falling rapidly down the other side. Now to Austin Engineering, another sort of situation where the market got a little bit wrong because the share price of Austin Engineering was in an uptrend. But still a bit of volatility in there, but generally the share price was moving up. This is the daily chart going back to about November 2021. Now, not a lot of liquidity in Austin Engineering. The share price had moved from the bottom left to the top right. And then on the 4th of May, the company did release a trading update and guidance update. Share price fell 20% on this day. And normalized net profit for financial year 23 is now expected to be in the range of 17 to 19 million, down quite a bit from the previous guidance, which was of 24 million, and they gave various reasons within this announcement. So this was a profit downgrade. The market doesn't like profit downgrades, and that's why the share price fell 20% on the day. Share price did recover a little bit the next day, 5%, but a lot of volatility on those 2 days, and also a lot of volume, massive high volume on the 4th of May. Volume as high as about 24 million shares, sort of high volume the next day as well. But the main thing is this is a profit downgrade. But if you do look through history, when the share price gets below the 150-day moving average, it's done it a few times in the past, year and a half, that's the time to take a position in this company. So if you think this profit downgrade is just a short-term hit to the company and they're going to continue to grow after this, so it's not structural problems of the business itself, maybe now is time to take a position in Austin Engineering. Another company I have not looked at before in any of my videos is 29 Metals. The 29th element in the period or on the periodic table is copper. Hence, that would make you assume that 29 Metals mines copper. That's exactly what they do. In fact, they also released a presentation at the Macquarie, the Macquarie Australia Conference. And just by looking at it, I've never done any research on this company. The only reason I know a little bit about 29 Metals is because of what happened to their Capricorn copper mine in northern Queensland. I'll talk about that in a second. But they have 2 producing mines in Australia, Capricorn Copper and Golden Grove producing copper, silver, zinc, and precious metals. They also have a mine, it looks like in southern Argentina or Chile, that sort of area. It's called Red Hill, but that's an exploring project. So Capricorn mine is now in recovery because of significant rainfall in that area. They call it extreme rainfall, and that's for the week ending 10th of March 2023. Unfortunately, they were right in the wrong spot, sort of in northern Queensland. I think it's north of Mount Isa. The extreme rain event resulted in approximately 1.5 gigalitres of additional water on site. I also saw some photos, extreme flooding in the area, including the mine site. And that's why the share price has taken a massive hit in recent times, because of what's happened to that Capricorn mining site. But this does open up an opportunity for those investors who are willing to take on a little bit more risk. Now, 29Metals did list on the ASX back in, I think it was July or June 2021. Share price got as high as about $3 and we'll say about 30 cents in April 2022, and then fell off a cliff in that middle period of 2022 because of overall weakness in the market. And the share price right now is right at that level. In fact, the share price has been going sideways for the last 2 months, and that's really coinciding with that flooding. So even though it seems like the market knew about that flooding beforehand, before it actually happened, based off this chart. Anyway, I doubt that really happened, but share price going sideways, a little bit more volume coming in as well. So maybe the bottom has been reached. If the share price does fall below about $1.12, that would be sort of a bearish sign moving forward. I'm going to do a little bit more research on this company just because I am bullish about copper in the future. And I could be wrong about that, but this could be one of those copper plays on the ASX that I have missed. I haven't really looked at this company in the past before. Maybe now is the time to do exactly that. Not right now, but maybe the next few days. There's been a suggestion, a recommendation that I look at AGL in one of my Kneppy's analysis series, and I have included. In fact, it's number 6 on my list after Iris, Clover, Parenti, Mass Group, Lycopodium, and then it's AGL. I haven't really looked at AGL chart for a while, and I was a little bit shocked what I saw here because of where the share price is in relation to a pretty strong, well, maybe not strong, but a good resistance level. If we go back to April, May of last year, so 1 year ago, share price actually did reach just above $8.80 and struggled to get above that, and then fell off during the middle late period of 2022, fell from about that level, $8.80 down to $6.40. But from about March, we have seen the share price of AGL really take off. In fact, there is a nice little uptrend line representing that by that sloped dash line from November of 2021. And the share price hit that uptrend line and then really took off and moved back up to $8.80. And on the last trading day of the week, on May the 5th, the share price closed right on that resistance level. Now, if I see the share price get above $8.90, something like that, that could be a bullish sign. So obviously, the market likes something about AGL. And then have a look, if you have time, if you want to, have a look at the long-term chart for AGL. Share price has been significantly higher than $8.80 in the past. Doesn't mean the share price will get back up to those levels, but possibly there are some tailwinds right now for these energy companies, and that's why the market likes AGL right now. And the last company I want to look at in today's video is Electro Optic Systems. I've already done a standalone video for this company. The share price has really taken off in the last few trading days. Apart from the Friday, we did see a little bit of selling coming in, not a lot, but I'm very satisfied to see the share price remain just on that resistance level. The previous day share price moved above the resistance level and there was not enough selling to force the share price down. So I wouldn't call this a false breakout just yet. It has the potential to be, particularly if we see more selling on the Monday and Tuesday. But I wouldn't be surprised to see the share price fall back to, say, 65, 70 cents. Or this could be the turnaround in Electro Optic Systems share price. So a potential breakout in this company's chart, in this company's share price. Share price right now is at August. So that's a 9-month high. So it looks like the bad times for shareholders of this company have maybe come to an end. But have a look at my video because the company did mention there's still a lot of uncertainty, a lot of risk when it comes to this company, particularly with the cash flow. That's all I have for this technical update, 7th of May 2023 edition, including 5 American-based companies on the New York Stock Exchange and NASDAQ, and 9 ASX companies, including NAB, one of the biggest companies on the ASX. If you have any questions, any thoughts about any companies I've included in today's video, I'd love to hear them, and so would the viewers of this channel. Don't be shy. Talk about anything you want to, particularly if it's about these 14 companies. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.